566. We are down 339 right now. Peter Schiff, the volume is not particularly heavy. There is not a lot of conviction on this sell-off. So why do you not look at this and say, wow, Boeing is 7% cheaper today. It's a great company. Why don't I buy some Boeing?
Look, you know that trick from department stores. They always have sales, but they have sales on overpriced merchandise. It doesn't mean that you're getting a bargain. And, you know, you can't always look for a reason for the decline. Bear markets don't need a reason to go down, or more specifically, bubbles don't need a reason to deflate. That's just what they do. And, you know, when you look at what's happening in the stock market, realize that this is happening in the real estate market. This is a big decline in assets that were propped up by artificially cheap money that is no longer as artificially cheap. And as people watch their home equity evaporate and their retirement savings go up in smoke, what do you think is going to happen to the spending? What do you think is going to happen to GDP? This is just not a decline. This is a recession that is coming, and it's going to be a brutal recession because there's absolutely nothing the Federal Reserve can do about it. They're going to try, but rather than reviving the economy or the markets, they're simply going to stoke the inflationary fires that are already burning.
Alan Nuckman, you're on the floor of the CME. Can you tell me what flows you see as we come up off the floor? We're still down 308 points. And if you look at the volatility index, it stands at 25.81 with a gain of 1.65.
Yeah, let's talk about that. That's very important because we're at below 26. The high on October 11th was 29. So we did not even make new highs in volatility, even though the market's trying to make some new lows. Today feels bad because we gave up gains once again. We can't find a bottom. The market was up significantly. Now the S&P is down 1%. Let's talk about percentages, not points. I mean, a 1% move in the market. Yeah, we had a long period of time. We had a quarter where the S&P did not have a plus or minus 1% on a closing basis for more than 90 days. You know, we just we're not used to this market movement, but I'm looking for signs of stability, and I think the fact that the VIX has this bullish divergence can be viewed as a positive. And to call a recession now, considering we're about a month away from all-time forever highs, that's being a little aggressive. And rates right now are what, 2.5%? You know, to act like we're at 15% and we have 5% inflation, I think that's getting a little over your skis.
6 minutes to go before the closing bell rings, and we are still in commercial-free mode. We didn't start off like this, folks. We had a whole different show planned, but with Susan Lee, Peter Schiff, Charlie Gasparino, Alan Nuckman, and Phil Flynn standing by, we have your back covered. Susan Lee, you're on the floor of the New York Stock Exchange. Yeah. Some of this reversal started on two pieces of news. One hit technology, and that was the European Union, United Kingdom, Britain, possibly imposing a digital tax. Correct. And then we had what our traders have talked about, the White House possibly threatening new and more tariffs, more onerous tariffs on the Chinese. What are the traders saying on the floor there?
Yeah, well, it was contained heading into this morning. We had a nice rotation upwards to start off the day, despite the fact that we got the news from German Chancellor Angela Merkel and her Christian Democratic Party. She's not seeking re-election there. No reaction on the markets, but you're right. Then we had that UK news on that sales tax and downgrades from JPM and also independent research on Amazon. And that's when you start seeing the levels tick lower. And then this news on China trade, and that's been brought up over and over again, Liz, on a lot of these earnings calls. And we do have big earnings this week. So do we get that turnaround? People were looking for some sort of floor that was given if Apple came out with a really strong number. A lot of buybacks as well, hoping from a lot of these corporates who are looking at these levels, thinking it's cheap, and they've been the main buyer of a lot of stocks so far this year.
Okay. Charlie Gasparino, not that I'm shifting any focus away from equities because we're still down 316 points, but Bitcoin futures are also tanking. There's really no kind of flight to safety or flight to something special or different. We've got gold down, which Peter just referenced too.
Yeah, I'm not in the Peter Schiff camp thinking that we're in a dire recession here, or even, but, you gotta look at some of the numbers in that GDP report, and you start to get scared that we're heading towards one. Look at the fact that business investment was way down. Look at the housing market, not doing so great right now. Interest rates, both are somewhat related to interest rates going up, but also that the tax cut, the corporate tax cut, did not produce enough bang for the buck that I think it needed to do. Because if you cut taxes this much, and it's a massive corporate tax cut.
Peter, you've talked about debt
let me
too.
just make this point. Let me make this one more point.
You guys fight it out because you're both on
I
the
will,
same
but
page.
I know, but I want to make one other point. That report, that GDP report, gave Jerome Powell some light, some sort of it gave him some cover not to raise interest rates in December. But Donald Trump did something very foolish. He attacked him publicly, and now he has to raise rates in December. And I think that's going to be a problem for the economy.
Peter, give me 15 seconds on this quickly.
You know that GDP number, they engineered that by bringing the inflation rate down from 3% to 1.7. And, look at the consumer income numbers this month. They're terrible. And, last quarter, trade subtracted the most from GDP in 33 years. We are losing the trade war big time. Our trade deficits are exploding just as our budget deficits are going through the roof. So we're having going to have a bond crisis as well as a currency crisis. That's what's going to make this bear market and this recession particularly bad. And look, it's just getting started. We're early on. So, this thing is going to be playing out for years.
We've got today's closer standing by. Aaron Gibbs is Senior Portfolio Manager. You see how I did that? See how I did that, Aaron? Charlie started to jump in. Aaron Gibbs.
I didn't start to jump in. I was still blown away that Peter thinks it's the end of the world. But go ahead.
Okay.
I didn't say the end of the world. Just the end of America.
Aaron, let's take
bad.
Aaron's shot so that we can get the two guys to hold off for a second. What are you purchasing?
I live
what do
in
you
Puerto
look
Rico.
at right now on a day like this?
We're looking at some of the value stocks. We've been saying that the spread between growth and value has been too big. We really think that investors might start looking at reevaluating what they really want to pay for when valuations are so much higher for some of these growth stocks that have slowing growth for next year. And so one of the utility stocks we like, First Energy is one, as well as the Staples, Constellation Brands is another one of our favorites. And they've been holding up well in these downturns.
Yeah, you can look at that. And as things ramp down, I would say, Susan Lee, we're down 281 points. At the low, we were down 566, Susan Lee. Can you give us sort of a feel from the floor before we bump up? 2 minutes to go, 1:30 actually, before the closing bell rings.
So, Liz, I can tell you right now that there isn't a lot of panic here. People are taking this in stride. We've seen this before. No one thinks it's the end of the world, as Peter Schiff says. I can tell you that. They think, look, this is a understandable correction, which is 10% down from recent highs. It's a rotation from growth to value. And yes, there's a safety trade taking place. But again, there's no fear on the markets.
Phil Flynn, give me 10 seconds on what you're going to do tomorrow in the morning when this market opens.
A day like this is why they invented the term turnaround Tuesday. Come down on one headline that's around Tuesday. I think we're going to be fine. Probably a great buy in here
Alan
somewhere.
Nuckman from the CME, what do you think?
It's all about earnings. You can't forget that. That's what prices out stocks. Stocks are not a reflection of the economy. Look at the corporate profits. Amazon had the greatest profit in its history at $3 billion, and the stock, they took some profits off the table. That's all this is.
Aaron, leave us with some type of focus for tomorrow as we get bump up against this closing bell.
Think a little defensively. We may see this going forward in a little more value plays going forward into 2019.
Yeah, which is Susan Lee's point that you're seeing that rotation. We want to thank everybody for jumping in front of the camera on what turned out to be yet another virulently volatile day. October 2018, Dow closes down 256 off the lows. Here's after the bell.
What a day, which I think we say at this time just about every day. But this